Hello ladies and gentlemen, welcome to my channel. My name is George Kingori, your online finance guy who speaks about all things finance, how you can be able to save, invest and grow in your finances. And today I'm going to speak about why I'm not too heavily invested in the current bonds, government bonds issued by the Kenya government. The reason that I am not as invested is because of my financial goals. Yes, my financial goals. At this point in my life, while I am still able to take a loan with the youth fund, my desire is to be able to grow the potential wealth of my family. So growth of our wealth is a major driver for my investments. And the problem with government bonds is that is not chiefly why people invest in them. The reason people invest mostly in government bonds is because of the surety of cash flow. Yes, cash flow is the main reason why somebody would invest in government bonds as opposed to other types of investment. And that is why government bonds are very popular with the people who are past their 50s and people who are entering into retirement, because they want an investment that is going to give them cash every so often and not just an asset that is creating value, because they might not see the value on a day-to-day basis on expenses that they have to incur on a day-to-day basis when they are not working. But for me, as at my age, my desire is financial growth and especially wealth creation. And the only way that I can be able to grow in wealth is to be able to look at investments that give me some income. Doesn't have to be too much, but overall they avoid a lot of taxation and they grow in capital gains. So what type of investments may I be looking into? This might mean I might invest more in land. I might invest more in forestry, that is planting trees and harvesting them at a future date. I might invest in real estate. Yes, construct houses and rent them out to people. Do Airbnbs, because Airbnbs will be able to be making use of my existing property and leveraging as much as possible by furnishing the house and creating a more expensive space. It could mean that I might invest in Uber business. This is because in as much as it is risky, the growth potential of my potential capital is greater than when I put the money in bonds. The problem with bonds is if I put 5 million, for example, 5 million or $50,000, the government will give me the $50,000 in 20 years time. So my capital has not really grown. I may have gotten the interest, but my capital will not grow. But if I take the 5 million and invest it in property, for example, over and above getting the monthly income, which the rate might actually be much lower than the government bonds, which are currently offered at around 12 to 13%, but for real estate I might get 8% to around 12%. It's not a lot, but my property, because of the land that is there, and because land does not really you do not produce new land, the value of land in itself without the property still grows in value, because there is much less land and more people wanting to acquire this land. And that is why land is becoming expensive. It is becoming smaller portions, and the smaller portions are becoming more expensive. So value in land in itself will still gain value. So if I invest in real estate, I get the rental income, but my overall investment or real estate investment, because of the value or growth potential of land and real estate, the 5 million might actually grow in the next 20 years to around 12 million. So the 7 million difference or $70,000 is the capital gain, and that is where the wealth is. I have not only gotten some monthly income here and there, but my 5 million investment 20 years before has accrued to 12 million with a capital gain of 7 million. And that is where I talk about wealth growth. And that is why I'm not too excited when the next government bond comes, because that is not my goal at this point in life. My goal at this point in life is to create wealth. And so that is why I'm not too invested in government bonds. Maybe in the next 20 years, I might be looking at investing in government bonds, because then I might desire the cash flow that comes with when I'm not working, the cash flow that is assured. And then the other thing is, at that age, you want the assurance of this money is going to come. The government will not fail you. Just like in real estate, where tenants do not pay or run away with your money or destroy property, there's a lot less hassle and a lot more cash flow assurance with government bonds. But because I'm still active, I'm still working, I do not thrive or do not seek this assurance of cash flow. And so that is why I'm not invested in government bonds. And my investments may structure towards the things that are going to create capital growth and capital growth potential over and above the interest income or return on investment on an annual basis. I hope that you are learning. What is your goal? Why do you invest the way you invest? These are questions that you need to ask yourself. Don't just put money because people are putting money, but think about, where do I want to go? What is my goal? Is it to get the cash flow? Is it to grow my wealth? Is it to diversify my risk? Is it to reduce my risk? What is your goal? Is it to have investments that have a lot of potential in terms of return on investment? So is it impact? So are you looking at impact? How are you going to impact communities? What are your investment decisions based on? The motive that you have might actually structure how you invest in the future. And that is why I don't invest as much in government's bond as per now. In the future, that might change because of the situations that I'm talking about. I hope you're learning, you're growing, you're becoming better in your finances. And leave a comment down below and tell me, why do you invest in government bonds, or why do you not invest in government bonds? I hope you subscribe to the channel. Remember to like this video and keep tuned because more content is coming straight to you. Thank you and enjoy your